Hey there, investors. Dimitri here. I am a long-term shareholder of Tesla's. I've been holding the stock since 2013, well over 10 years, and I did recently sell some of my shares. I've been paring back on the stock since the valuation's gotten a little ahead of, I think, the story, but I'm still a shareholder, so I'm really excited to go over the earnings report today. What we're going to do is we're waiting for the shareholder deck to come out, and as soon as it does, I'm going to do kind of a live reaction and go through the numbers and give you my thoughts as they appear. And we're going to take a look at basically the Q2 earnings results that are coming out in just a couple minutes. All right, so let's start by looking at the stock's valuation and where it's been going lately. We can see here that the stock in the past year is basically up year to date so far in 2026. It's down 14% compared to the market's 10% increase. So definitely trailing the market by about 25 percentage points. And that is significant, although something like that can definitely change pretty quickly with a couple of quarters of really good results. If we zoom out a little bit over the last year, Tesla shares are up 13%. And the lowest you could have bought the stock was close to about a year ago. And the high was around the end of 2025, around Christmas time. That's when it's at its all-time highs, and it's down pretty significantly. Let's see, from there, it's down about 20% from all-time highs. So kind of there in the middle. The stock has not been a really huge winner for shareholders, but again, that could change really quick with a quarter or two of really good, decent results. And let me take another look to see if the shareholder deck has been posted yet. Doesn't look like it's come out just yet, so we're going to wait for that. In the meantime, let's take a look at some of the metrics that really describe the business so far. Market cap is a big one. It's a $1.4 trillion business, and that is one of the biggest companies on the market. And we can see here that annual revenue is about $100 billion, so that makes the math really easy. The stock is valued at about 14 times annual earnings. And so that's a really quite a premium and quite a high valuation. And we can also see that that's one way to look at it. We can look at this valuation here over the trailing 12 months. So looking backwards, it's valued at about over 300 times the past year's earnings. And then this price to, enterprise value to sales, again, price to sales, basically 14 times the past year's sales. And so that's another way to look at that, a really high valuation for the stock. That's one of the reasons, that's the main reason that I decided to sell a bit of my shares, just because I thought it was pretty richly valued. And what are investors getting for that price? Revenue growth over the last 3 years is just about 4/10 of a percentage point. So essentially flat sales over the last 3 years. And we've also got, zoom out a little bit over the last 5 years, and it's looking better. Sales growth was 13% compounded annually over the last 5 years. Zoom out even more, and obviously over the last 10-year period, the stock's been on a tear. The business has been growing at a 30% compound annual growth rate. That's insane. But again, investing's more about what's happening in the future, not what you delivered in the past. So the number that really matters right now, I think, for most investors is this revenue growth at about 0% so far over the last 3-year period. Okay. Let's see if those financials have been updated yet. The stock price does look like there's been a reaction. I do think it has been posted. Shares are down slightly, around 3%. They're down 1% so far today. So Wall Street doesn't seem to be super excited about the early results. But again, that can change when Elon gets on the conference call and starts discussing the business in more detail. Let's see if that slide deck has been posted yet. I'm not seeing it just yet. We already know that the deliveries and production numbers came out really strong. The delivery number in particular for Q2, we had 468,000 Model 3 and Model Y. deliveries in the quarter, and that was a lot better than I think most investors expected. Just 12,000 other models, including the Cybertruck. So altogether, 480,000 units were delivered this quarter. We already knew that. We're going to get the sales, the revenue, and the profitability figures here in another couple minutes to go along with those numbers. But we already do know that this was a good quarter for growth. They produced more than 450,000 vehicles, sold more than 480, delivered more than 480,000, and this 14 gigawatt hour of energy storage products is also a surprisingly strong number. I think that was 8.8 the quarter before, so almost 50, maybe almost an 80% increase between the prior quarter and the current quarter on those energy products. Okay, just waiting to see for that slide deck. We can look at some of the figures for the other slide deck from, oh, there we go. It has posted. So let's dive right into that and see what's going on with the Q2 2026 update. This looks like the same setup that we've seen for a while. We do have an Outlook section. I'll be interested in diving into that as we get there. Headline numbers, profitability was close to zero, $400 million. So profit margin, I think, did not increase that well. I do think there's quite a bit of spending, as I think investors were worried about. Cash flow, this jumps out at me right now. Free cash flow turned negative. It was something like $2 billion in the prior quarter, and now it's negative $1.1 billion. Not a huge surprise, but not something that I was really excited to see in terms of the company spending a lot of money on things like robotaxis and the new factories that it's spurring up and AI expenses that is not actually paying off just yet. So let's see what management says. Q2 was a strong quarter for the vehicle, energy, and services business, as well as their manufacturing, infrastructure, and AI initiative. So that's a little bit of a PR sentence right there. Somehow everything was going really well. I think when we dig into that a little bit more, we'll see that's probably not the case. Some businesses did better than others. Our focus remains on strengthening these core businesses and making the necessary investments that will deliver amazing abundance. I've heard them mention that phrase a few times before. Amazing abundance is what it's all about. Tesla generated over $100 billion in revenue, which we already saw on the trailing 12-month basis for the first time. So they just crossed $100 billion. We did see here that that figure was $98 billion. So this past quarter was a little bit better. I want to look at the actual percentage. We'll see that in a second. If the percentage increase was better than expected. So I think most investors were looking for sales to rise at about a 16% pace in this quarter. So we're going to find out whether that happened. Okay, energy storage business returned to growth, so that's good. It did decline by, I think, around 10% last quarter. Second best quarterly deployment on a trailing 12-month basis. Cybercab did begin the production at the Gigafactory in Texas, and the Tesla Semi remains on track for production this year in the new factory in Nevada. I think that's good news as well. And progress, management says, also continued on the battery pack capacity expansion. So those things are all good news in general. FSD, supervised full self-driving penetration, continued to grow in the quarter with more customers opting for subscription. They said the same thing last quarter. We don't really have a lot of figures there to rely on, so we just know that the subscriptions are rising, and that's good news, but we don't have a lot of information about raw numbers and how many people are subscribed and what they're paying every month and what that looks like in terms of profitability. But obviously that's a very profitable part of the business, the services where they get that monthly fee for the full self-driving. Good news, I think, for Elon Musk and his team. And then they close out by saying Tesla is in its largest and most exciting period of investment. Okay, that's one way to put it, meaning they're spending a lot of money. From here, there remains much hard work as we aim to revolutionize transportation, energy, and productivity through our leading real-world AI. Scaling will be nonlinear. Okay, that's in English. We're going to say that, translate that into the company is not going to be setting new records every quarter. So there'll be some steps backwards, I think. And I think this is one of those quarters in terms of steps backwards in terms of cash flow. We're going to see that in a second, but that number already jumped out at me. Scaling will be nonlinear, and we are focused on long-term value creation. So that's another kind of warning to read between the lines. Tesla is saying that we're going to have some bad quarters mixed in there over the next couple years, and we're focused on long-term value creation. So there might be some short-term bad results that investors are going to need to brace for. But let's dig into some of these numbers. So the total automotive revenues, this is a surprisingly strong number, I would say, 20.5 billion. Revenue grew at a 23% rate. So that's really good, actually. That is a surprisingly high number. I'm pretty sure most analysts were expecting that figure to be, particularly given that last quarter sales grew at a 16% rate. We're now seeing that total revenue grew at a 26% rate. Mainly thanks to that increased revenue in the automotive division. But we saw growth at the energy storage business and a nice acceleration in the services and other business. That was up 50%. So 23% for the main business, 50% for the services segment, which is the second highest as well. And then we got a 13% increase in the energy generation and storage revenue. So all that together was up 26%. And if we look here at the estimates, most of Wall Street was looking for the quarterly sales figure of 26. So I'm looking at Fiscal.ai here, and there's a link in the description if you want to take a look at this. Most of this is free to use, but if you want to use this kind of modeling portion, there is a paid part of this product that you can take a look at. And there's a link in the description if you want a discount on that. But most analysts were expecting 26.5 billion in Q1 revenue according to the average here, and we got 28.2. So significant beat. I think that's almost 10 percentage points faster than most people were expecting. So good news for the top line results. Sales were definitely stronger than expected. Gross profit margin also looks solid to me. It declined slightly by less than 1 percentage point to 17% of sales. Still basically the same 17% of sales that we saw a year ago. Operating margin, okay, this is some of the bad news. I think we're starting to get into a bit of that. We are looking at operating profit margin declined by 3 percentage points to 1.4% of sales. And let's zoom out a little bit and take a look at what the company's been doing in that regard. Operating margin is right here, and we can see here that this is over the last few years. It's set an all-time high of 17% operating profit margin in 2022, fiscal 2022, and as you can see here, it's been on a downward slope since then. Year over year, it dropped to 9% in 2023, 7% in 2024, 5% in each of the last 2 years. And if we switch to a quarterly figure here, we're going to see profitability. So we don't have the June quarter just yet in these results, but we do have operating profit margin declining from 5.7% to 4.2% last quarter, and then it fell again this current quarter to 1.4%. So not great news. I'm not happy to see that in terms of operating profit. And we can see operating profit margin they just generated $400 million in income from operations compared to $28 billion of revenue. So really tiny. But I guess the good news is that the company did remain profitable. Tesla is still earning cash, generating cash. And again, let's take a look at the stock price. Currently, it is trading down about 2.5 percentage points. So not a huge surprise, it doesn't seem like, in most of these metrics. Let's go down to cash flow here. This is really important. I was watching this as well in my preview video, which you can take a look at as well. I'll link it in the show notes too. So net cash provided by operating activity was significant. It was 4.7 billion, up from 2.5 billion a year ago, almost doubling. So 85% increase. I think that's a really good sign for the business. It's definitely continuing to stay very efficient in the automotive business segment. But capital expenditures, here's the thing I was afraid of seeing, that roughly tripled, well, up 142%. So all that spending that we talked about earlier about things like the semi and robotaxi and Optimus and all of the AI spending is starting to definitely pressure results, and we're seeing average revenue capital expenditures increase to about $6 billion. That's way more than we've seen in any of the last few quarters. Let's zoom out a little bit and take a look at that as well. So the cash flow statement, again, I can zoom out the chart for operating free cash flow. That's right here. And this is on a quarterly basis. Again, we don't have this current quarter just yet, but the lowest quarter we've had was December of 2024 with a $13 billion decline. And now I think this is definitely the worst quarter for cash generation for Tesla since late 2024. So that's not a really good part of the story, I wouldn't say, particularly because operating profit margin declined too. So far we're seeing really good operating revenues. Sales growth was surprisingly strong across the business, but profitability is tanking and expenses are creating a huge pressure on cash flow, which is now turned negative. Free cash flow was negative 1 billion compared to over 1 billion in the past 2 quarters and 4 billion back in mid 2025. Okay, let's get into some of the meat of what the company says they accomplished in the past quarter. Automotive, our overall Q2 record deliveries were supported by records in several markets, management says, including South Korea, Australia, Colombia, Japan, Taiwan, Thailand, Portugal, Philippines, and a couple of other small markets. So they don't mention Europe really in general, and they don't mention the US, but here they do say we launched the Model YL, so that's a more affordable, I believe, trim in the US market in July. Consistent with our other launches in other markets, we've seen a positive response from customers. So generally, that makes sense. They are doing pretty significantly good results in terms of the core automotive business. Interesting that they don't mention the general health of the U.S. market. I'm sure that's going to be one of the first questions that Elon gets in the conference call. And they've also didn't mention much about the general U.S. market now that we don't have the energy rebate boosting sales in the U.S. market anymore. So I'd be interested to see what's going on. I'd like to hear management talk about what's going on in the different markets in the U.S. And in others. Feel free to mention in the chat. We are live here, so let me know where you are watching from and how long you've been a shareholder, if you own Tesla or not, and be interesting to hear from you. So energy storage, this segment is, again, set some records thanks to production in the mega factory in Shanghai. Robotics, this is another moonshot segment here. We've decommissioned the manufacturing lines, management says, for their S and X to make room for the first generation lines of Optimus. They did say that last quarter, so they do say they still expect to start production soon. So it's coming, maybe in 2 weeks. But I know investors have been watching this for a long time, myself included. So I'm interested to see what's going on with this business and if and when when we're actually going to see some real results that we can test. And so additionally, it just says here, we're still building that up. Supporting infrastructure, this is another part that investors are a lot more excited about than the automotive business over the next 10 years. AI training compute. They have doubled their on-site compute abilities in Texas in terms of megawatts compared to in the first half of 2026, I guess, compared to a year ago. Cortex 2 is going to be supporting vehicle and humanoid robot autonomy software, so that's going to be going into both the robotaxis and into the Optimus products. So obviously that matters a lot. I guess that is good news. We're still getting a little bit of hyperscaling kind of situation here. These are the kind of figures that you're hearing from companies like Microsoft in terms of doubling their compute power. So good news, I guess, for the business. But again, we can't understand what that's going to do for actual earnings over the long term. It's going to be several quarters until we have some good details on that. Other supporting infrastructure, they did add another 2,400 new supercharging stalls. That's about a 17% increase year over year. That's good news. I don't own a Tesla myself, but I know that's the main, one of the main issues that people worry about before buying that car is that network. And by adding onto that network, the more they can scale that up, I think the better it is for the business over the long term. We're further reducing supercharger wait times through an improved trip planner. So that's really exciting. I think if you could, organize the trip planner in a way that you're sending people in at the right time, that'd be pretty amazing. I think in a way too. So that there's always a empty space there at the supercharger, and I think that's definitely something that the software could do. Let's look at some more results here. AI software, we began delivering the FSD version 14. I think last quarter we were in, let's see, 14, version 14.3 launched in April. And so they're saying now in Q2, version 14 Lite is gone on to customers in the US and South Korea with the AI 3 level hardware. Management says the software build distills the driving behavior from AI 4's version 14 series into both the camera and the compute. Okay. It also addresses the challenging driving situations with improved proactive and reactive responses. So just upgrading that again, and I guess that's good news for all kinds of Tesla drivers and owners. The usage statistics here are kind of interesting. They're just showing some self-drive usage stats, like an active driver option here. This person was driving. I guess they're trying to almost gamify and get people to use the FSD as much as possible. Here they're showing that you're doing 92% on self-driving in the last 600 miles or so. Actually, this person drove hands-free using FSD for almost 600 miles, 560 miles. And I think that's good because it's good because it's a safer way to drive. And I think you're going to be dropping. I guess the hope is that you can drop your insurance cost over time if you're going to use the FSD drive a lot. If it makes up the majority of your driving, then theoretically, on average, you're going to have a lot less incidents over the course of the entire fleet. And so, this would be one cool long-term, long-tail thing for me to watch, for investors, I think, to watch going forward. Is the company able to actually decrease the total cost of ownership by, things like lowering the cost of insurance because cars are not getting into as many fender benders and accidents because of FSD. But again, if you're just joining, my name is Dimitri. I've been a long-term shareholder, and I've written about and covered stocks for the last 20 years and been an investor for 20 years. And Tesla is one of my bigger, most successful investments over the last 15 years. And so I'm just doing some live reaction as the earnings come out. And again, the stock has been down slightly. It's down about 2%. But again, I would expect that to potentially change significantly once the earnings call happens. But we're just going to go through the slide deck here and see what just jumps out at us. And I'll give us a little rundown, a little review at the end about what is going so well for the business and my takeaways. But so far, mostly positive in terms of growth, negative in terms of cash flow and operating profit margin. That's the big takeaway so far. Robotaxi, this is what everyone's really excited about, these services. We started production of Cybercab. Okay, there's an exciting thing. They're actually producing it. We're not just saying it's going to come anymore. It's actually being produced in their, which is going to be the workhorse of our Robotaxi fleet. Engineering test drives of production Cybercabs on public roads began during the quarter. That's exciting as well. So again, we're actually meeting real world results. And we began offering employee rides in Cybercabs on our Gigafactory campus in July, both important precursors to Cybercab development in our Robotaxi fleets. So I think investors are going to be really excited about that. Shareholders are going to be really interested in seeing those results. And we got a step closer to some actual real world production of the Cybercab, which let's be honest, a lot of the business's valuation is resting on this one thing going well. The robotaxis. We expanded the unsupervised operation area in Austin, which is still pretty small. They're way behind companies like Waymo, but that's okay. They can scale this up, and it's important to be mostly in prioritizing safety, and I think that's smart for the company to be doing this on a slow and steady pace rather than rushing into it and maybe having an accident with a injury that would derail potentially the entire program. So good news on robotaxis in terms of it's actually making steps into production. FSD adoption grew in the quarter. Here we are getting some figures, including record new net subscription. That again is another really PR sentence. I like Warren Buffett's statement that even a bank, your checking account sets a record every quarter if all you get is 0.1% interest rate every quarter. So setting a record doesn't really mean much because you would expect numbers to just increase a little bit over time. So the important thing is how many new subscriptions we got. We got a few numbers here in terms of attach rates. So we didn't get the actual numbers of how many more people are subscribing to FSD, but the attach rates are over 55% of new deliveries, management says, include FSD subscriptions. I don't believe they mentioned that last quarter. Let's take a look. They did not give us that figure last quarter, so I can't really compare that to anything else. Sounds pretty good, but because it is an expensive service and it is great for profitability over time, but that's just something to remember now. 55% of new deliveries are coming. People are deciding to pay the extra monthly fee for FSD. Services set a new record. This is the company's outlook. They call it outlook, but it's not really much in here. We're focused on maximum capacity utilization. This is what they said last quarter. I'm just looking for any changes between last quarter and this quarter because that would be significant. We will manage the business in cash such that we ensure a strong balance sheet, maintaining sufficient liquidity to fund our product roadmap. This is not changed from last quarter. Let's pull that up as well, though, just to make sure. And quarter two profits will continue to execute on innovations to reduce the costs, but over time we expect hardware-related profits to be, they say, accompanied by an acceleration of AI. I think the term really would be replaced by the acceleration of AI or dwarfed by the acceleration of AI. That's what people are investing in Tesla for right now. They're excited about the acceleration of AI, software, and fleet-based profits to dwarf what the company's making right now, which is very little. Operating profit margin is just 1% of sales right now. And so that's what the investing thesis really relies on. And the product, we continue to evolve and augment our product lineup with a focus on cost, scale, and future monetization opportunities. We remain focused on growing our sales volume through a differentiated and efficiently managed product portfolio. This is about what they said last quarter. Tesla Semi and Megapack 3 remain on schedule for production starting in 2026. So that's good news. That's still what they said last quarter. No big delays. I think that's also good. First generation production lines for Optimus are being installed in anticipation of production in 2026. Capacity build out and ramp related to our multi-year infrastructure initiatives, including AI, compute, solar power, are underway. And then let's see, we just have a few cool pictures about the new trims available in the US, autonomous riding at the Gigafactory. The business in Austin, I believe, the Gigafactory production of the Cyber Cab. That's cool to see. First generation production line in Fremont. A lot of happy workers. And the Semi is going to be produced very soon. These charts I've looked at before. There's nothing that we haven't seen before. But let's take a look at this last one, and then we'll wrap up with key takeaways. What increased revenue? So increased vehicle deliveries. That's solid. Probably the best news in this whole report. Revenue was up 26%, again, compared to 16% last quarter. So the business is growing really strong. And also growth in services, so automotive services and other. Minor impact of foreign exchange, about $500 million. But the company also got a lot more FSD subscriptions. So we're not getting a number there, but we're being told that FSD is being attached to about 55% of new Tesla car sales. And so it is lifting profits and revenue significantly. So that's good news. Lower average selling price. So last quarter was higher average selling price. This quarter was lower. Interesting that the business is is accelerating its growth, even though, average selling price, you would expect the demand to increase, and that's what happened. So I think the company's accepting a little bit of a trade-off here. Faster sales growth in exchange for lower operating profit margin. Profitability income decreased 57% to $0.4 billion, resulting in a 1% operating profit margin. And let's look at why this was. So increased deliveries was good news. Lower average cost per vehicle was good news. And then the higher ancillary sales. But the things that really hurt operating profit was increase in expenses driven by AI and other R&D projects. So basically the spending, including the CEO performance reward. This was happening again last quarter. And lower average selling price did impact profitability. That makes sense. And then quarter over quarter, the final big metric here was cash. On the books is still over $40 billion. That's fantastic. That they're not burning a lot of cash. They did burn through, I think, over $3 billion this quarter in free cash flow, but the company's still sitting on a lot of significant cash. Sequential decrease was $1.2 billion, was a result of negative free cash flow of $1.1 billion, driven by increase of capital expenditures. So my three main takeaways: one, really huge, big win, I think, for the business is the fact that the company was able to get sales growth in the range of 26%, was able to accelerate from 16% sales growth to 26%. I mean, that's the big headline takeaway. The company's doing really well in FSD subscriptions. That's boosting sales. Lower prices, people are responding to that. I wasn't super excited about hearing what management had to say about the US and European market, but I think in the conference call, we're going to get more detail about that. And then the bad news was the two things: the cash flow turning negative because of capital expenditures. And I also was not thrilled to see operating profit margin decline for a third straight quarter from 5% of sales to 1% of sales. And again, you can see these figures again. You can look at the link in my description where I show my Substack link there, and I'll be diving into the actual results in my newsletter, and you can go ahead and subscribe there if you're interested in that. And if you do your own research on stocks like this, you can look at the link below, and I also have my Fiscal.ai link in there, which is what I used to do all these charts that we were going through today. You can look at that, and there's a promo code in there for 15% off if you do decide to buy anything there. Just use the promo code Dimitri. So altogether, pretty good growth quarter. Not surprising that the stock is down a little bit though, because of profit margins declining and cash flow turning negative. So again, we're going to just have to wait and see what happens with Tesla. Thanks for tuning in, guys, and I will see you in the next earnings report.